Home Depot reports before tomorrow's opening bell, and it's the first hard evidence on whether this record rally can survive a consumer that just showed its first real cracks. Because Friday, the S&P didn't just cool off, it closed back below the exact level Ashley told you to watch. Good morning, it's Monday, August 17th. I'm Nick Vertucci with Ashley Reyes and Marcus Brooks. Grab your coffee. Futures are reopening on a truce that isn't signed yet. Gold and Bitcoin are pulling in opposite directions, and we've got 4 straight days of retail earnings and a Fed minutes release standing between now and Friday. Let's get into it. Quick scoreboard note first, and it's a short one. Ashley, your 10-year call, and Marcus, yours on Lamb and KLA. Both were bets on today's close, and it's 5 a.m. The bell hasn't rung yet.
So we're both just sitting here.
You are. Genuinely can't grade either one until tonight. We'll do it properly tomorrow.
Fine by me. I'll take the extra day.
You say that like the extra day helps you.
Doesn't hurt.
For the record, season standing going in. Marcus, 13-11, streak of 1. Ashley, 12-12, 5-game skid. Sarah and Dave still 0-1 and 0-2 off the bench.
I'd like it noted. I inherited most of that skid.
Noted. Doesn't change the number.
And Ashley, your week-long call from Sunday on gold, and Marcus, yours on Walmart's guide, those don't resolve till Friday, so they just ride along in the background all week. On to today. Ashley, futures. What are they telling us at 5 a.m.?
Cautiously higher, and here's why. The S&P and the Russell both hit fresh record highs last week, breadth included, not just the mega caps, and something like 87% of companies that have reported this earnings season have beaten on EPS. 68% cleared revenue too. That's a genuinely strong table to reopen from.
So why cautiously and not just higher?
Because of the headline, everyone's actually trading off this morning. Over the weekend, there was talk of the Iran conflict being within, quote, the perimeters of a deal, including reopening the Strait of Hormuz.
Which sounds enormous until you remember we've heard versions of that sentence before and watched it fall apart inside a month.
Right, and that's exactly why futures are only cautiously higher instead of ripping. Traders are pricing in real skepticism, not popping champagne.
What actually moves if it turns out to be real this time?
Oil drops, first and fastest. And energy earnings this quarter have been unusually strong, specifically because of this conflict. Exxon and Chevron both posted sharply, higher profits on elevated crude, not on volume. A genuine de-escalation puts a direct dent in the thing that's been propping that up.
I'd add, watch how risk assets treat the headline over the next few hours, not just oil. If equities shrug and don't really rally on deal talk, that's the market telling you it doesn't believe it either.
What's actually on the calendar before the bell?
Empire State Manufacturing. At 8:30, First Regional Factory, red for August, and the NAHB Housing Index right behind it. Neither one usually moves the tape alone.
The appetizer.
The appetizer's appetizer, honestly. Though the NAHB number's worth one extra beat, because Toll Brothers reports tomorrow alongside Home Depot, so today's housing read and tomorrow's housing earnings are basically the same conversation split across 2 mornings.
And the two feed each other? If the NAHB index ticks up even slightly this morning, that's a small tailwind for how Toll Brothers gets read tomorrow. If it's soft, tomorrow's homebuilder print walks into a much more skeptical room.
So today's minor data point sets the frame for tomorrow's actual earnings.
That's most mornings this week, honestly. Nothing today decides anything by itself, it just loads the gun for what's coming.
Which is as good a reason as any not to overreact to Empire State or NAHB in isolation this morning. The real story lands tomorrow, when Home Depot reports before the open.
And I'd actually flag that one hard, because Home Depot's own commentary earlier this year was already pretty blunt. Housing turnover stuck near historic lows, executives saying customers are anxious about affordability, job stability, financing costs, and specifically pulling back on large discretionary projects. If that tone repeats tomorrow, that's not a new story. That's the same story getting louder.
Or it's a story we've already priced in for 2 quarters running, and there's nothing new in it. We'll get there. Let's finish setting the table first, because what actually happened Friday is the piece everyone reopening this morning actually needs.
Walk me through the close.
The S&P finished Friday at 7,785, down 0.2% on the day. Still up 0.4 on the week, third straight winning week. But that daily number matters more than it looks.
Lied.
Because Friday's own show, my own words, were can it hold above 7,800 into the close? It didn't. That's the level I told people to watch, and it broke the wrong way.
One session. On a week that still ended green, third week running.
Sure, but pair it with what actually pushed it there. A preliminary Michigan sentiment read came in soft. Americans more pessimistic on the economy, inflation still front of mind, and that was on top of a Commerce Department report the same week showing consumer spending unexpectedly dipped.
Two separate signals, same direction.
Same direction, same week, and it's exactly the kind of thing that gets buried under record week. Headlines if nobody says it out loud.
I'll grant the data's real. What I won't grant yet is that it's a trend and not a wobble. One soft prelim sentiment print, one spending dip, against 3 straight weekly gains and an 87% beat rate. That's not the ratio of a cracking consumer.
It's the ratio of a consumer that hasn't cracked yet.
What would actually change your mind on that, though?
2 clean data points in a row instead of 1. A soft NAHB this morning would already start it. 1 prints an anecdote, 2's a pattern.
What else moved under the surface Friday?
The tell that matters more to me is the VIX closed near 14.85 multi-month lows. Nobody's paying up for protection heading into a week this loaded. That's either total confidence or total complacency, and I genuinely don't know which yet.
I lean complacency. Low vol at a stalling record isn't a warning by itself, but it's never been the all-clear either. It's historically the setup, not
The safe part. Yeah, I remember this speech from Friday too.
because it's still true.
And the 10-year, which is Ashley's whole pending call, so no one's off the hook here.
Ticked up to 470 Friday. Didn't get anywhere near my 465 trigger.
Which, by your own framing Friday, puts you in the doesn't break, rally stays narrower camp.
I know exactly where it puts me. We'll see if Monday agrees with Friday.
So here's where you two actually split. And I don't think you're going to close this gap this morning. Is a 2/10 pullback plus 1 soft sentiment print the first real crack? Or is it noise sitting inside a third green week?
First crack. I think by Thursday night we've got confirmation, not just a vibe.
And I think by Thursday night this was one Friday afternoon nobody remembers because the earnings kept coming in clean.
Then here's the marker. For anyone listening, instead of just us arguing about it, Home Depot and Target both lean into trade down, discretionary pullback language this week. Ashley's right, and we stop calling records healthy without an asterisk. They don't, and hold the guide like they did in February. Marcus wins this one, and Friday was noise. We'll know most of it by Wednesday night, all of it by Thursday.
I'll hold there.
Same.
Good. Now the calendar that's actually going to decide it. Marcus, walk me through the week.
4 days. Back to back. Home Depot tomorrow before the bell. Baidu and Toll Brothers report alongside it. Wednesday, Target, Lowe's, TJX, and Analog Devices. Same afternoon as the FOMC minutes. Thursday, Walmart, Alibaba, NetEase, and Deere.
Same afternoon as the minutes. That's a loaded Wednesday.
Extremely. You're getting a consumer read and a Fed read stacked on top of each other, and the market's going to have to decide which one it reacts to first.
Remind people what's actually in those minutes.
The July 28th, 29th meeting. 9 to 3 to hold at 350 to 375. But those 3 dissents came from regional presidents voting together in favor of a hike. First unified hawkish bloc like that since 2016.
And that's still relevant 3 weeks later because
That vote happened before this week's softer sentiment data, and the minutes are the closest thing we get to a transcript of how close that hawkish view came to actually swaying the room. If it reads like a real fight, not 3 names in a footnote, that's a yield spike walking straight into Jackson Hole.
I'll push back there again, same as I did on the 10-year Sunday. 3 weeks is a long time in this cycle, and the data since has mostly gone the other way. I think the minutes read as history, not preview.
and Jackson Hole itself. What did we actually learn since Sunday?
This is Kevin Warsh's first keynote as chair, August 28th, and the reporting since confirms what we guessed. He's telling people the speech is about big-picture structural questions, not near-term guidance, and that the Fed won't be, quote, constrained by market prices.
Meaning?
Meaning, don't expect him to hand you a rate signal. Expect him to try to show the Fed's independent of what the market's already pricing. Which, with a September decision, 19 days out and odds basically a coin flip, is its own kind of signal.
That's actually the more interesting read to me than the theme itself. A new chair choosing to sound independent instead of dovish 3 weeks before a coin flip meeting tells you he's not worried about spooking anyone by staying quiet.
Give me the one number you're each actually watching Wednesday afternoon.
Whether that dissent language gets any softer or firmer in the minutes versus the statement. Softer, this whole thing fades. Firmer, Ashley's.
Spike gets a lot more likely. Yes, I'll take that sentence. Thank you.
Generous of you.
Same number either way, honestly. We just disagree on which direction it breaks.
Home Depot, real quick before we move, what specifically are you listening for tomorrow?
Whether customers pulling back on large projects turns into customers pulling back on everything. That's the line between selective spending and actual retrenchment.
I'm listening for the guide, not the adjectives. If they hold or raise it, all the cautious language in the world doesn't matter as much as the number they're willing to put their name on.
And analog devices, Wednesday. That's the one nobody outside the chip world watches, but it's actually a clean read on something else entirely.
Industrial demand, not consumer demand. Chips that go into cars, factories, medical equipment. A soft guide there is a broader economy story, not a stretched shopper story.
Which is exactly why Wednesday's not just a Fed day. It's a luxury read, a value read, and an industrial read, all landing before the minutes even drop at 2.
Real quick, human moment. Because it's Monday, we just did 2 straight weekend specials, and I genuinely forgot this was a 5-day week again.
Welcome back to the treadmill.
I set 3 alarms for this and still nearly missed the first one.
Solidarity. Okay, back to it. Topic 3, gold and Bitcoin, because the split from the weekend note is still sitting right there, and it plugs straight into Ashley's call from Sunday.
Gold had a second straight weekly gain, trading above $43.76 an ounce, a softer dollar and this week's cooler, CP. I both feeding that. Meanwhile, Bitcoin, which actually broke above 65,000 midweek on 853 million in ETF inflow, has given essentially all of it back. Sitting under 63 now, back-to-back outflow days.
Same data, same week. Why the split?
Because they're not being bought for the same reason. And I think that gap only gets more obvious the longer this goes on. Gold's bid is central bank buying and rate path positioning. Sticky, structural. Bitcoin's bid was ETF flow momentum, and flow reverses the second sentiment does, which is exactly what happened.
Which is why I'd be careful about anyone still calling Bitcoin a hedge for anything right now. It traded exactly like a high beta risk asset this week. Up hard on flow, down hard, the second the flow flipped.
Does any of that change your call from Sunday?
No. If anything, the last 2 days reinforce it. My call was on gold specifically, hawkish minutes. Wednesday, gold gives back some of this run, under 43.50 by Friday. Stale reading minutes, it holds or grinds higher. Still exactly where I am.
And Ethers, the quieter footnote worth mentioning again. Still taking in money while Bitcoin bleeds, staking rate near record. Capital's getting selective inside crypto, same as it's gotten selective inside AI, names the last few.
Weeks, right? The Cerebra split all over again, just wearing a different ticker.
Exactly that.
So gold's the boring, steady bid, Bitcoin's still the volatile one, and this week's Fed minutes are basically the swing vote for both your call and the whole complex.
Pretty much everything this week runs through Wednesday at 2 p.m. One way or another.
Last topic before calls, oil and the Hormuz story, since it's genuinely been deciding half of what we argue about for 2 weeks straight.
It has. Crude's been elevated all week on the conflict, and that's shown up directly in earnings. Exxon and Chevron both posting sharply higher profits, purely off elevated prices, not volume growth.
And now there's deal talk.
Real deal talk, but unconfirmed deal talk. That's the important distinction. The weekend framing was within the perimeters of a deal, reopening the Strait included. Traders are discounting it hard because we've watched similar language collapse before, sometimes inside the same
month. I know. You made that point about April on Sunday too. I still think you're underweighting the coordinates on a map part of this.
There weren't coordinates on a map in this weekend's version. Though, that's Sunday's story. This is a fresher, vaguer headline. I want to see the actual mechanics before I call it real.
Fair distinction. I'd still watch the reopen closely rather than assume it fades. If oil actually sells off on this instead of just drifting, that's the market telling you it believes it more than the headlines suggest.
And if oil does roll over here, that's the fastest path to yields. Actually cooperating with the rest of the disinflation data, which is the thing that's been fighting my 10-year call for 2 weeks now.
So a weekend truce headline out of the Middle East might do more for your rates view this week than Wednesday's Fed minutes?
Might. I don't love saying that out loud, but yes.
Which is exactly why I'd watch it over the FOMC minutes if I had to pick just one thing this week.
There's a broader geopolitical backdrop sitting behind all of this too. Quickly, what else is on the board?
Putin made a visit to the Kuril Islands over the weekend, the ones Japan disputes, and Tokyo summoned Moscow's ambassador over it. doesn't move markets today, but it's one more flashpoint on a list that already includes the Taiwan Strait.
None of that's a today story, but it's the kind of thing that turns into a today story with zero warning, which is exactly why you keep half an eye on it, even on a week this packed with scheduled catalysts.
Filed. Noted. Let's get the calls. And since Home Depot's the first real test tomorrow morning, that's what these are built around. Ashley, you're up.
Mine's on Home Depot. If they repeat that discretionary pullback language from earlier this year, anything close to customers holding back on large projects? I think the stock sells off tomorrow and drags the retail complex with it into Wednesday's names.
Marcus.
Mine's the other side of the same report. Home Depot holds or raises guidance like it did in February, regardless of the cautious language. I think the stock holds or grinds green, and it's the first data point saying Friday's wobble doesn't extend into the week.
So tomorrow morning, before either of you have finished your coffee, we'll already know something about who's right this week.
That's the job.
Here's the week in one breath. Futures are reopening cautiously higher on record momentum and an unconfirmed Iran deal. Friday's close broke the level Ashley called, with sentiment and spending both wobbling underneath a still green week. 4 days of retail earnings and Wednesday's FOMC minutes will do more to settle this argument than anything said on this show. Gold and Bitcoin are still telling two different stories, and oil and the Hormuz talks are sitting underneath basically every other call on the board. Watch Home Depot before tomorrow's open, watch Wednesday at 2 p.m., and watch whether oil actually believes the weekend's own headlines. If the show's useful to you, follow Nova Ventures Daily wherever you get your podcasts, and find us live all day at Nova Ventures CEO on X. That's your Monday morning brief. Have a great day, and we'll see you tomorrow.